Welcome back to the Wealth Planning Podcast with Brister Law. I'm Anthony Brister. Today's episode might be one of the most financially impactful episodes that you listen to all year long. And I don't say that lightly because this episode is about one thing: how to legally keep more of your money in your pocket before December 31st. If you're a business owner, real estate investor, or high income earner, and you do nothing between now and year end, the IRS will gladly send you a bill for that. But if you act on even 3 or 4 of these strategies we're about to walk through, you can literally change what you owe in April and start building wealth more aggressively. I'm Anthony Brister, tax attorney and wealth strategist, and my job is simple: help you save more in taxes, help you grow your portfolio, and help you protect your assets and maximize your wealth. But before we get tactical, let's frame this. The tax code is all about deadlines. Some moves you can wait until after the tax filing deadline, but a lot of the biggest moves die at midnight on December 31st. If you're listening and thinking, I'll just wait until tax season and see what my CPA says, that's like waiting until after the game ends to decide what plays you should have called. Tax planning is about proactive decisions, not reactive reporting. Over these next few weeks, we're going to walk through 5 big buckets: entity optimization and payroll, family and income shifting, real estate and STR rep strategies, wealth and retirement buckets, and investment, equipment, and advanced plays. Today, I'm going to introduce a bunch of the strategies in each bucket so you can see the full map. And then in the next 4 episodes, we'll slow down and go deep on each area. So let's start with entity optimization. These are the unsexy moves that quietly save people 5-6 figures every single year. First, we've got the S-election or retroactive S-election for your LLC. If your business profit is creeping above that 50,000 mark, you're still a sole prop or single member LLC, you're probably overpaying in self-employment tax. Moving to an S-Corp tax election lets you split income between a reasonable salary and profit and distributions. You have to pay yourself reasonable compensation and payroll. And here's a rule of thumb I want in your head. For every $10,000 you leave as profit instead of salary, as salary instead of profit, you're roughly paying $1,500 extra in taxes. And if your accountant is forcing you to take a huge salary just to be safe, that might be costing you thousands every single year. Next, you should have a board meeting and Augusta Rule. Holding a legitimate board or advisory meeting for your LLC can unlock deductions for travel, lodging, meals, in some cases renting your home to your business for meetings. Lastly is entity cleanup. If you've got old LLCs sitting around doing nothing, but you're paying state fees or franchise fees, year end is when we should decide whether to shut that down or keep it till next year. These are strategies that we'll unpack deeply in the next episode. Bucket 2 is real estate. If you own short-term rentals, long-term rentals, or you want to, this is where things get fun and you can really save a lot of money. We're going to cover the short-term rental loophole, how to use short-term rentals to offset active income like your W-2 or business profit. We'll go over material participation, the test that you must meet to make those losses non-passive. We'll go over real estate professional status, when it makes sense and when it doesn't. And we'll compare short-term rental loopholes, partial asset dispositions, the self-rental strategy, owning your building and renting it to your business and using those losses to offset your business income. Real estate is where we can stack bonus depreciation, cost segs, short-term rental loopholes, and all legally cut your tax bill. And that's in episode 3. The next bucket is wealth and retirement planning. These are not just tax strategies. These are wealth building systems. Think your solo 401k for self-employed people or business owners with no full-time W-2 staff. It's powerful because you can stack employee and employer contributions and a Roth on top of that. We'll talk Roth conversions, intentionally paying taxes now to build a bucket that never gets taxed again. And done in the right brackets, this can save you huge amounts later in life. HSA, HRA, health savings, and health reimbursement arrangements that can turn medical costs into systematic tax strategy. S-blocks, security-based line of credits, borrowing against your investments instead of selling them and triggering taxable gains. Coverdell versus a 529, getting money in tax advantage accounts for your kids' education without giving up control and flexibility. All of that's in episode 4. And the last bucket is where most people want to start, even though it should actually come after the first 4. Think things like 100% bonus depreciation, Section 179, buying that vehicle or equipment before December 31st instead of January, oil and gas, IDC credit for certain high-income clients, investing in drilling programs that can offset ordinary income and not just passive losses, charitable planning, donor-advised funds, QCDs, and giving appreciated stock, tax loss harvesting, and crypto loss strategies, locking in losses strategically and not emotionally, income shifting and timing, paying the kids, spouses, pulling income forward, or pushing back expenses and invoices. All of that will be episode 5. Here's how I want you to use this series. Don't try to do everything. Take a few things from each episode, listen to each episode, write down 3 to 5 strategies that clearly apply to your situation, and then either implement them with your existing advisor or book a tax planning call with my firm and we'll build the blueprint for you. And if you're serious about keeping more of your money, don't wait. Hit that like button, press subscribe so you don't miss the next updates over the next few episodes. Thank you for listening, and I'll see you on the next episode.